So, greetings to everyone. So, this is a session where we are going to discuss certain questions that arise to many of us about the global changes that are happening post-COVID, a lot of geopolitical changes happening, and economic policies being discussed and proposed, and more importantly, how all these things affect businesses. So we can have this discussion in kind of some questions and answers kind of format. And we have with us Professor Subodh Mathur, who is a well-known economist who has worked on various policy issues with many international organizations. We have Mr. Pankaj Bajaj, who is a well-known entrepreneur who has been very successful in producing and exporting a lot of engineering exports. So maybe I can start with some questions for you, Mr. Bajaj, and Dr. Mathur, you can also chime in as needed whenever you want to add something. So the first question is to you, Mr. Bajaj. Because of let's start with the trade policy. So Regional Comprehensive Economic Partnership, or RCEP, it has been a major discussion point when it comes to India's trade policy in the recent past. And last year in 2019, India decided to withdraw from that. And now, last year in 2020 November, the agreement was signed. Do you think India's withdrawal from RCEP has been a missed opportunity for our Indian businesses, or do you think it was a step in the right direction, or maybe it was a necessary evil, or something that a bad step that could not be avoided? Because if India had signed it, India had become part of it, it would have caused a huge catastrophe and a lot of dumping of exports from countries like China. What do you think is closer to the truth on these two different types of arguments, Mr. Bajaj?
Yeah, thank you, Professor Badri. Now this is a very concurrent and relevant subject of discussion. A bit of context will be useful at this stage. Firstly, let me tell you that India already had an FTA with the 10 Asian countries since the last 10 years. So there was already a substantial inflow of goods from these countries. The trade deficit has not worsened in spite of whatever we feel, in spite of coming of these goods. Yes, that India has not benefited in a big way with this FTA, but contrary to the expectation, the trade deficit has not worsened. Now, the reason we have not benefited is because of our internal problems. It is not something to do with whether we have an FTA, whether the goods come in cheap or not. This is one. Secondly, the Chinese goods, which was the main worry for India. India is already flooded with Chinese goods. I mean, there is no dearth of Chinese goods. India, in fact, have benefited from the Chinese manufactured and other Southeast Asian countries coming into India. The third worry about RCEP was the dairy farming for the dairy farmers, particularly from the New Zealand, because they have some world-class cooperatives with very good and very, very high quality and cheap products. Now that again is a bit of a dichotomy, because India is the largest producer of milk in the world, but still because of lack of downstream processing, we are not competitive in dairy products. So these are the three main worries which were there. The other thing which I would like to add here is that there is a bit of a dichotomy in India's trade basket. On one hand, we have one or two sectors which are highly integrated with the global value chains, but the vast majority of others are not trade integrated. So if you look at pharmaceuticals and auto components, uh, we are very well integrated with the world's value chains. Um I always tend to believe that we have to focus on our strengths. Our strengths lies in agriculture, value addition, on services, and it's a bit of a surprise that in spite of we being a labor surplus and having cheap labor, most of our exports are in capital intensive, knowledge intensive sectors. So I tend to believe that we have to focus on our strength rather than trying to play the diminishing returns game of catching up with our competitors. Let us export what we can to the world and let us import what we are not competitive. This is what I strongly believe. That's it from my side. Professor Mathur, your views will be appreciated as well.
Well, I
Yeah.
think you have summed it up very nicely, the issues on the ground. And I just want to comment on that last thing that you said. We are labor intensive, but our labor is not productive. We have actually unproductive workers. They are not skilled. They are not even semi-skilled. Many of them are simply, we saw all those migrant workers returning home. They are barely skilled. So the problem is that we are on the labor side, the productivity of even our engineers is low. What they say is that only about 30 to 40% of India's engineering graduates are employable because the rest are just got degrees. And lower down, the surplus workers are really not competitive and are really not able to produce at the same level. Uh, they just don't have the skills. So we have surplus labor and we just don't know what to do with it. And this is really one of the biggest dilemmas for India, that we will have more and more young people coming out of school, becoming 18 years old, and be functionally not competitive in the world. We are not able to produce from the village schools, and we don't have any, we talk of vocational education, but really none of that works. So there's no, we are stuck. It's a really horrible situation, which I want to focus on. I'm shifting away from the topic a little bit, but just picking up in yours. That this is, in my view, one of the biggest problems that we are facing, that we have surplus workers who are basically not very productive, and hence our businesses are not very competitive. So this is one of the fundamental problems. This is not related to RCEP. On RCEP, I defer to you. What you have said is just fine.
Okay.
Thank you, Professor Mathur. Very insightful. I think from whatever both of you have said, I think it is very clear that there are a lot of domestic policy and infrastructure and skill development that needs to be done before being able to reap the benefits of these trade deals. And it's I also feel like it's like a chicken and egg problem. Many times when we talk about these kind of trade deals, we tend to think that our domestic industry is not competitive enough, and because of that we don't open up, and the domestic industry is not competitive enough because it has been protected from international competition. So I think it has to be done I think the policy has to be more sophisticated. There have to be there should be some coordination between the different ministries, and a lot of implementation on ground is needed in terms of all these things. So thank you very much again to
Well,
both of you.
let me just add one point there. When India joined WTO, we really did open up a huge number of businesses to, and as Mr. Bajaj has said, India is already flooded with Chinese goods. I mean, even our murtis are made in China, even our saris are made in China because we joined the WTO. And what happened after joining the WTO is that the consumers did benefit. Consumers are getting lower and cheaper items, and people say it's Chinese junk, but it's what people can afford. It's what people buy. And what we didn't get is the export growth. We did not get a trade deficit, but so many of our businesses are no longer there because the Chinese are flooding the market. People are all buying cheap Chinese smartphones, right? Now India is beginning to make, but for all these years, so the old days where we were not open, that really changed with the WTO, right? India joined WTO, and today, even in the small cities, you can get fruit from New Zealand, this from here and that from there. But what you don't have is Indian exports all over the world, right? The only exports are there, as Mr. Bajaj pointed out, are in the high-tech business. You are in the human capital intensive businesses. They are the pharmaceuticals, you are the software. It may not be properly just capital intensive, it's human capital intensive. That's where our exports are. They are not in the uh, semi-skilled workers. We just don't have that. So honestly, I think we are no longer close to competition. We are open to competition. The Chinese goods everywhere, and we just can't compete against them. We just can't because we don't have the ability.
But I think, yeah, but I have two points to make here. One is that I believe that there is no shame in buying, importing from anywhere cheap. That is one. It's a big misnomer here in our country and many other countries that when cheap goods are being done, some big damage is being done to our economy. That must be busted. I believe on the contrary that when cheap goods come, it's a big service to the consumer because he buys cheap, he saves money, and he spends on other things. So this is one. Secondly, what we are overlooking is the large Chinese market, which is opening in a very big way for consumer goods of all kinds from all over the world. Europe has taken big advantage of the Chinese market by exporting its luxury goods and automobiles and high-tech stuff. India has been getting into the game, but this kind of policies will not let into get the Chinese market in a big way. I will give you just 2 or 3 products for which Chinese market has been opened by Indians, but we are not able to explore properly. One is cotton yarn. China wants to get out of cotton yarn. India is the most competitive in the world. India can capture the entire Chinese market. We have the raw material, we have the skills, we have the lowest cost in the world. Second is steel, where Chinese are buying more and more steel products from India. So, and the third is pharmaceuticals, where we are not able to get into Chinese market. So we have to look at the other side of the coin also. I think we have passed that era of trying to outcompete our neighbors. Trying to do that is going to give us diminishing returns. We are not in a position to increase the share of our manufacturing to 18 or 20% like China or Southeast Asian countries did 20 years ago. We are stuck. Our employment of manufacturing to total labor is, I think, stuck around 15%. And I don't think by any kind of policy, by any government intervention, we can increase it. So I think government quarters trying to make a policy itself is an incorrect thing. That is my view.
I'm with you, Mr. Bajaj. No more comment from me. I endorse what you are saying.
Yeah.
Yeah, same here, Mr. Bajaj. You nicely articulated it. I think so. There are a lot of opportunities opening up, and we are not able to tap into that. So, but at least one thing that is happening is the consumers are benefiting, and also another thing is even industries are benefiting from inputs that are cheaper that can be imported rather than use domestically produced inefficient goods. And also another thing related to this, and I think moving to another question which is also related to this is the question is I have is has COVID brought in any change in your particular business exporting or importing strategies in general, particularly with respect to China? With respect to China, have you changed any of your strategies? Secondly, I mean, if you're not changing anything on that, do you sense or see any opportunity coming from investments that are moving away from China to India? Because there is a lot of narrative in the media and among the people, particularly in Delhi. When I talk to people, they say that a lot of investments are moving away from China, coming to India. Do you see any of that in the ground level? And yeah, so these two things, two kind of related things. One thing is your own importing strategies with respect to China, and investments that are shifting away from China to India. So what do you think about this?
Okay. So thank you very much for these very relevant questions. So the first one, I think there are two different questions. One is, what are the changes post-COVID in our business scenario? So one thing is that we are, yes, there are difficulties of workmen, of other things in the post-COVID world, of normalization of trade, of normalization of travel. Of course, these are short-term issues which we are grappling with, but we are scouting for opportunities coming from two areas in particular. We have already got some opportunities which we are trying to encash. One is that during the peak of the COVID period, particularly in the southern Europe, in Spain, Italy, parts of France, so many competitive companies closed down. We know of some companies which closed down, or they went into some kind of a stress. It is estimated that in Italy and Spain, roughly 20 to 30% of small, medium-sized Netherlands and Belgium, there was more support from the government, they could survive. So this is one way by which some opportunities have opened for us by so in certain segments, the demand has boomed all of a sudden, unexpected. Some of these segments in our user segment is, for example, home furnishings or things like carpets, which there was a very scanty buying. Now people are disposing of their home furnishings at a very short intervals, or people are using large number of hygienic goods. So these kind of certain bump up in demand of certain products has created certain opportunities for certain segments. So answering your first question, that what work processes you are changed. So we are sniffing for opportunities. This is one. The second part of your question is under the how is the trade how the global trade scenario is changing in the. Can you just repeat your questions?
The second question is about the investments. So because there are a lot of companies in China, multinational companies in China, they want to move away their investments from China to other countries. In the media that many of them may come to India.
So I would like to answer it in a much broader way, that China's specific angle is a more narrower interpretation of it. So the broader context is, has India been able to get the investment shifted from other countries? So I would say this, that some companies will come to India because we have a big market here. So market is a big attraction. And recently the PLI scheme, which has been announced, production linked incentive scheme for certain segments. Now that is a good, it's a very good way of bringing the investments and compensating the the industries for the lack of competitiveness. But I mean, but even that needs inputs and the components from China, which the government has to allow. But the bigger question is this: that this this protectionism of PLI, production incentive, has to be for a short period of time. It must have a sunset clause, and it must be for a limited number of segments. The government keeps on extending, then it becomes a big handicap for the government. But coming to larger questions, that has India been able to? I would not say India has been able to shift, but we have been able to get investment. What I am aware of is many companies setting up shop which were exporting from China to India. Now they've set up shop in India because we have a big market. Let's say in certain products we are giving some incentives. That's all I have to say on this.
Thank you, Mr. Bajaj. I think that's very clear, and I think the one thing I've been when I talk to our friends in China, colleagues in China, and to discuss about the kind of resources available there and so on. So one thing that strikes my mind is that in China, it's no more just a cheap labor kind of economy. So when cheap labor is one thing, and in fact, in some ways, Indian labor is cheaper than China. But like Professor Mathur mentioned, if you account for the productivity and skill, China is way ahead. Their investments in R&D, research and development, innovation, and upgrading the technologies. So for these, and scale, for these things, China is way ahead than India, Chinese companies. So my thought about the second question is also very much in line with you, and also the first question. So I think
I am facing a bit of bandwidth. I'm facing a bandwidth issue, so I am just shutting off my video. Maybe the bandwidth will improve.
Sure.
Yeah. So. Yeah, so I could not understand your questions properly because I have a bandwidth issue. So would you just
Yeah, I think maybe I can also do that if that helps.
Yeah, maybe. Yes.
It's better now? Can you?
Yeah. Yes, I can hear you now.
Okay. So now the next question we can move on to, unless Professor Mathur, do you want to add on this point?
Professor Mathur, do you have any comments? Whatever I had said or whatever Professor Badri has said.
Well, I mean, I defer to you for on the ground stuff. On the move of investment to India, we have to distinguish between two different reasons, two broad reasons. One is, as you mentioned, to capture the Indian market. And that I think is going to happen anyway, because the Indian market is large. It is not a question of moving from China. It's very convenient to be in India to serve the Indian market. For example, smartphone makers will shift to India to sell smartphones in India. So that's fine. The question is there anybody coming in to India to export the product? The only one that I know of is a shoemaking company that has shifted to Agra, because Agra has a base for shoemaking for decades, and they have moved. But in general, the FDI is not coming in to export the product that they are making in India. The FDI in China was to export products from China to the rest of the world. Most of the FDI in India is to make products for the Indian market, partly under protection, partly because you are not really still in fully competitive, fully open world. So yes, in short, we will see some move because they want to serve the Indian market, but I don't see any major shift to make products for export.
Yes, I endorse totally what you are saying.
Yeah, okay. Thank you.
Yeah, completely agree with you,
Yeah.
Mathur. I think the next point of discussion is about the competition between. Okay, now we can move on away from China. I think we already discussed a little bit of that. That just getting obsessed with China alone is not healthy. We also have to look at the other countries. So how do you view the competition that is coming from the Southeast Asian countries, particularly when it comes to the previous point of the global geopolitical and supply chain tensions leading to countries rethinking their investment strategy in China when they're moving away from China. What we have seen in the past, if you take, for example, the US-China trade tensions, is that a lot of the investments in China, they've moved to countries like, Vietnam or Laos, Cambodia, Indonesia, Malaysia, Thailand, those countries, Southeast Asian countries. So one question is, how do you view this competition with these countries that India faces? And how about the other less discussed countries, like the African countries? And there, I think the main point is India has been, reasonably competitive in areas where you need unskilled labor. You don't need like even semi-skilled, but you can do away with just cheap labor, which is not necessarily skilled or productive. So in those kind of areas, Africa now is emerging. African countries are emerging, and I already, when I discuss with people in the textile industry, for example, they are quite worried about competition from African countries. So that is one thing. So how do you view these global competition with other countries? And secondly, in particular, Southeast Asian countries may be good to discuss because they have been quite acknowledge that they're quite tough to compete with because they're extremely competitive. So, Mr. Bajaj and Dr. Mathur, you can share your reflections. Maybe Mr. Bajaj, you can start.
Professor Badri, with respect to Southeast Asian countries, I think they have perfected the model of super specialization to a very, very high degree. If you go there, and you will find that each country is specialized in a narrow set of goods. And they, am I audible? Hello?
Yeah, we can hear you.
Yeah. So each country, if you find, is very specialized in a narrow set of products, and they do it day in and day out. So that is a model which is very difficult to anybody trying to emulate that. For example, if you go to Indonesia, they are very good in light engineering and textiles. If you go to Malaysia, they are very good in electronics. If you go to Thailand, they have the largest investment of Japanese automobile companies outside Japan. They have the Hondas and Toyotas having big plants exporting out of Thailand. If you go to the lesser developed countries of Cambodia and Myanmar, they are getting the textile business. And the star of the region is, of course, Vietnam. Now, all of us, we know about it. They are getting the Chinese capital, and they are getting the markets from everywhere in the world. So these are very special regions. They have the advantage of nimbleness, focusing on narrow niches. India always falls in the trap of market size. We have the market that we always try to imagine ourselves as that the world is rushing to us because we have the market, which is true for the sake of our market, but which is not true for the sake of global competition. So I think going forward, trying for us to compete with any of these nations is futile. It's an exercise which is self-defeating in nature. This is my view. We have to focus on our strengths, which we already have. coming to Africa, yes, there are some amazing countries there, and in the post-COVID era, some of the country will rise very fast because the COVID did not hit there. There are star nations like Rwanda, which was 20 years ago, it was facing the genocide. And now the capital of Rwanda, Kigali, is the center of fintech and banking and international business.
Cannot hear you,
These
Mr.
are,
Bajaj.
Yeah, there was a
do I have a audible issue?
Now it's
there was
okay.
a brief disconnect.
Yeah. So these, I think the African nations will be one of the stars for the future to look out for. Not all, because a few small nations, they are certainly something about which we have to take notice in the future. Not only in the field of manufacturing. I think manufacturing potential itself is very overestimated. That is my view. We have to look at the new emerging areas, how fast they are catching up, how fast they are catching up in fintech, how fast they are catching up in services, how fast they are catching up in uh, agriculture. So these we have to very look at these areas. These are my view.
Wonderful. Thank you, Mr. Bajaj. Dr. Mathur, do you have any thoughts?
No, I agree mainly with Mr. Bajaj, but I have not been to Rwanda for a couple of 3 years now. But really, this is a small country, they are really not a rival to India. They can do some things. They are very hardworking people.
Yeah.
They pushed me harder than any other country to produce reports for them, to work, 18 hours a day. So yes, they are very hardworking and very motivated, but they have an inherently unstable political system, and it's going to explode sooner or later. I'm not talking about tribe, I'm talking about the political system, where it is unworkable. We can't. So the problem in all of these, my question number one when I go to any country is this: is there a living head of the government living a normal life, a past head of the government leading a normal life? And if the answer is no, then the country is not stable. According to me, as a political economist, it's essential to have a living former head of the government leading a normal life in your own country. If the answer is no, you are unstable. That's Pakistan, that's Rwanda, that's Uganda. Only country that passes easily is Ghana, Tanzania. Right? Answer is no in Nigeria. So if that answer is no, yes, you can do some things. I went to Uganda so many times, saw so much growth, but it doesn't work because the head of the government refuses to listen to anybody anymore. They have no inputs. It works for a short time. Like in Rwanda, what they said is that we cannot go to the president with a problem. We also cannot go to the president with two options. We have to discuss it among ourselves and go with one option, and then he says yes, or he kicks us and says no, right? Okay. In the end, people only go and say what they think he will say yes to, right? They all become yes people or yes men. They don't go and think and say, listen, they first think, this is called managing upstairs, right? They manage upstairs. They go not with what will work, but what the guy will approve.
Yes,
right?
yes.
So then you don't get the truth. You are lost. You are just lost over time, because what people figure out is what you will approve, and then they only tell you what you will approve, and you are lost. It doesn't work anymore because you are only hearing what you want to hear. So, and Rwanda is a small country. Yes, Kigali is a wonderful place. Kigali is a wonderful place. But what is wonderful? The hotel room is $250 a night, which is worse than an Indian hotel room at $90 a night. So, it's a very expensive, high cost place. And there's no universities, there's no education system, and they are doing a great job, and I support them. It's not like I'm against them. I helped them get a $50 million grant, right? And I helped them get a $200 million grant from the EU. They hired me just so that I could tell the EU why they should give the money. And I did. But that's not the point. The point is that they cannot really, they don't have the fundamental strengths that the Indian economy and the political system has. Manmohan Singh is leading a normal life in India. Nobody is threatening him, right? He's okay, though they may be opposed to him in any way and every way, but nobody said anything to him. He is leading a normal life. That is the key test. You don't have it in Pakistan, you don't have it in Rwanda, you don't have it in Uganda, you don't have it in so many countries. It's a fundamental issue. The US also faced it right now with Trump. He didn't want to become a former head of the state leading a normal life. He just refused it. But they won. In the end, they got it, right? So this is what I'm saying. Let's not be afraid of any of these small African countries. They are not capable in, and I'm very sympathetic to them. I've traveled all over rural Africa. I've bust my guts to go and help them. But I can tell you where their level is. It's not anywhere near the ability of Indian people. It's just not there. You won't find a single PhD in Rwanda who is available to do any work. So they don't have the skills. And that's unfortunate because the colonial system really screwed them. Anyway, let's not get into it. What I'm saying is, yes, we are really going to have a very hard time competing with Vietnam and with the special in South Asian countries. Malaysia is, of course, quite far ahead of India and so on. But in the end, the Indian economy and the Indian political system has a deep strength and deep roots and deep strength. And what is needed is a focus on them, not getting distracted in, anyway, let me not get into politics and current issues. But what I'm saying is India has many, many advantages which could propel it into much higher trajectory. Right? And let's focus on bringing
Yes, you
those.
have to focus on strengths. Yeah.
Oh, wonderful.
Hello?
I think you mentioned this amazing kind of indication as to how can you think of a country as a competitive country or not, depending on the policy, the political situation. I think this is really important because so there is one thing where you say that you can say that policy is not a major driver. If you take, for example, in India, we discussed previously in the session about how whatever policy is made, certain things are kind of structural and they're difficult to change. Whereas this kind of thing is much more fundamental. For India, we're saying that because there are some basics taken care of, and beyond that, policy doesn't matter. But at this stage, when political stability and so on, those are at stake, government matters a lot. Yeah, I think that's a great discussion. And now I think I also completely agree with both of you on this. So the next point I had to discuss was what is the relevance of stock markets, high Sensex, to business in general, and your particular industry in particular, Mr. Bajaj, because even if whether you take US or India, the stock markets are performing spectacularly. I mean, of course, there are some downturns also in the past few days, but in general, during COVID, they have appreciated a lot. And sometimes people take this to extend and infer that this is an indication of K-shaped recovery, where the richer become richer and poorer become poorer. But I wanted your thoughts on that. What is the impact?
Economy on the ground and the Sensex, right?
Actually, I couldn't hear you clearly. I think so. The idea, what I'm saying is, whatever is happening in stock market, how much is it a reflection of what is happening in real business, particularly in businesses in general, and then in your work in particular, your business, your industry in particular?
So, because I am not able to hear.
Let me switch off the video if that helps.
How the economy is going.
We also could not hear you, Mr. Bajaj.
I can't hear.
Yes.
Right.
Yeah. Can you repeat? So I think you are asking me to repeat the question. The question is, how much relevance does the stock market performance have on the real business in today's situation? In today, how much do you think the rise of Sensex, for example, is reflecting your industry's performance, for example?
Yeah. So, hello, am I audible?
Yes, now we can hear you, Mr. Vijay.
Yeah.
Yeah. So let me say this. I think what we understand traditionally is that wealth effect, which is created by the stock market, and income effect, which is created by the general buoyancy economy, are very closely related. And in the past, one was directly correlated to other. If you have more wealth because of stock market, there will be more economic activity and there will be more income. But what we are seeing in the last but somehow we are losing this. We find that there are losers and winners being created globally as well as in India. If hello, I'm audible.
Yes, Mr. Vijay, we can hear you.
Yeah. So if
Just 1 second, I have to answer this call for a second, and then I'll be back with you. Okay.
Yeah. Fine.
Hello,
So,
Anand. No, I'm on a Zoom call. I'll call you back. 10 minutes. Yeah. Yeah, go ahead.
Yeah. So what we see now is more and more the stock market is focused on a less number of sectors. If you look at the current rally in India, it is a narrow large cap companies, basically in the financial and digitech space, which have gained market. The small and medium enterprises, they are largely unaffected by what is happening on the stock. It happens in the long run. But I don't see any relevance for the stock market for the common man, except for the fact that some individuals get wealthy and they will hire more support staff. But apart from that, I'm not able to see any interconnections. A few sectors are gaining in each sector. You take financial services, you take healthcare, you take steel. The market capitalization of the top two companies is increasing as a percentage of total market share of the segment. This is what we are seeing.
Thank you, Mr. Bajaj. I think we got the crux of your discussion. Dr. Mathur, do you want to add further on this?
I agree. I just want to add that it's the stock market is just one part of the financial sector. And my focus is much more on, I mean, I like that the stock market is now actually a little bit more into the middle class through various mutual funds. Uh,
Yeah.
and certainly that is a big change because the mutual funds have allowed people to participate in the stock market without being directly involved in it through mutual funds. So that's a good idea. But I think really my focus is on the financial sector, the debt part, much more than uh, the stock market. So I'm much more interested in getting credit to medium and small enterprises and also venture capital to startups. You know, there are young people whom I'm in touch with through Quora and LinkedIn, and they're always sending me ideas. Not that I'm an entrepreneur of any type, but they send me ideas to look at. And India is buzzing with young people with ideas. That's what I can say. You know, this buzzing with young people with ideas, but they have a zero hope of getting any money from anybody except fools and family. I mean, there's only two people left available to them, and that also not much. So when you are buzzing with ideas and you are left without any capital from anywhere, then you are stuck because you really cannot proceed any further. And in fact, one person asked me a question on Quora, why is there nepotism in India? And I said, it's because we have a lousy capital market. Because if I want to do anything, I have to have a rich person in my family who can finance my initial work. But if I'm a poor guy with an idea, nobody will finance me, so I cannot rise, right? In fact, I had a person come to my home a few years back, 2 years back. He's a rich guy, fairly rich guy, but he said to me, I gave 10 crores to my son to start his business. I said, right. Yeah, I mean, I'm not critical of him. I know him well. But that's nepotism, right? It's right nepotism right there because and nepotism is a problem because you are not that you are helping your own family. The problem is that people not belonging to rich families don't have access to capital markets. The stock market won't give it to them because they are too young, too small, too early. And even the traditional MSMEs, they cannot get capital from the stock market. So I don't think we have such a big role for the stock market in startups and MSMEs. Mr. Bajaj is actually at the upper end of MSMEs as far as I can tell. But the other people, they are not really able to get credit. So the credit markets are really stuck in India. And we talk of fintech, and I'm in touch with a group of young people who talk of edtech and fintech to me all the time. But we are unable to do anything. We are not able to deliver. We are able to talk a lot, and we are able to say how we can find a way to provide credit to farmers in India. But the truth is, we don't have any way to do it. We just don't. We just don't. We can talk a lot and we can say we have satellite data, we have this data, we have this innovation, and we have that innovation. But actually, we don't have the ability to deliver. And where we do have the products, we don't have an ability to work with the government, which will facilitate our move into villages and so on. So, I'm a remote part of this work. I mean, I just, they talk to me occasionally. But what I see is that we are really, I'm much more focused on the debt market rather than on the stock market because, in the end, equity is expensive, debt is cheaper for people who are starting up or who are MSMEs or whatever it is that they want to do. And instead we get all these things. So, the farmer loan crisis, they're committing suicide and all. I say, where the heck is the capital debt market? Why are they able to get so many loans that they are going to the government bank and they get loans and then they have to commit suicides? I mean, who's lending them this money? The person who's lending this money is going to not able to recover. So the debt market, anyway, sorry, just the point that the debt market to me is much more critical than the stock market, which is really just an equity market. Of course, equity is also important, but you can sell some of your assets for equity. Debt is the key. Mr. Bajaj,
Yeah,
you are the expert.
I agree with you totally. The debt is the key. The up to the medium segment, small and medium companies have no chance of tapping the equity market. So debt is the key. And recently, the cost of debt funding in India has come down a lot, which is a good sign. If you look at, but the problem is the sustainability of this cost. Uh,
Yes.
we have some benefits for the medium and small enterprises, which is also a good thing.
Yeah.
The problem is we are not sure how long these things are going to continue. The problem is we live quarter to quarter. If we live on this cost of funding being announced every quarter. We have to chase the banks on a quarterly basis, and if there is a new guideline is not renewed on the first day of the next quarter, we are sort of, for example, we have an interest subvention for exporting companies, which makes us a little bit competitive. But we are not sure that whether it will continue for 1 year or 2 years or 3 months. Now, this policy uncertainty is worse than anything. This is something which we need to. If the cost is high, let us we know that our cost is high, and if the cost is low, then we know our cost is low. But when it is low for 6 months and suddenly it goes away, then that becomes a very dangerous situation.
True, absolutely. The
Yeah, yeah,
regulatory uncertainty, policy uncertainty
yes,
always
yes.
stops investment. You cannot
Oh,
invest with these things
we
because you
cannot.
have enough risks anyway, and this additional
Yes,
risk is just not acceptable to anyone. And
exactly.
let me just add one more point. The government does have the Mudra scheme, but so many of those loans are non-performing because they are really just a terrible exercise in public relations. You are giving them loans without any credit norms, and it's just money that will not be recovered. And how productively it is being used, I don't have any knowledge. Maybe Mr. Bajaj has. I have not looked at it. But the fact is that they are not going to be returned. And this is not the way to run a debt market where your loans end up being NPAs. And as it is, the big banks are suffering from NPAs. Mudra is also suffering from NPAs. Is it really improving the productivity? I have no knowledge. Perhaps you do, Mr. Bajaj.
I
Thank you.
I to comment too much on Mudra thing because I'm not very well aware about
Okay,
this.
fine. But Mudra
Yeah.
itself is a sign to me that the government is intervening in the capital, in the debt market. It's a sign that the debt market is not there, right? It's a clear indication that you don't have a debt market that is functioning. And
It
your
is, it
point,
is, it is, it is not fair. You
yeah,
see, the cost of funding for the large companies in India is way too low,
yeah,
and compared to the medium and the large and the small, medium and the small companies, historically and traditionally. If you look at the NBFC space, why it is dominated by one or two players? Because the NBFC leaders like Bajaj Finance or Shriram Finance, their cost of fund is so low.
yeah,
No newcomer has any chance to stand in the market.
yeah,
So the bond market, and it has got to do with the bond market. This is what I feel. We have unmatured bond market, so we are dependent on the public sector banks on setting the pricing in the debt market. Public sector
yes,
banks are largely the extended hands of the government.
yes.
Now, this bond market, independent and thriving bond market is the bane of the debt pricing in India, in a nutshell.
Okay, all right. I think I've said enough. I don't want to add any more.
Yeah.
No, thank
Yes.
you, both of you. We have had great perspectives on this, and I think this also, like this discussion, has been so far quite broad-based. So they've already covered some of the other questions I had in mind. So I only have a couple of questions, and in the interest of time, I will probably directly jump into the questions. One is about the recent changes in government policies, some reforms, some recovery plans, and so on. Do you think are they affecting any of your business plans positively in your industry? Is it helping you to be resilient, go to the path of resilience? If so, you can explain a little bit on that. If no, which is probably at least one part of the answer potentially, you can also suggest what could be the policies that what should the focus of policy be for recovery, and also and there is a related point I wanted to
No,
discuss.
I just want to interrupt. The recent change in what you said, change in the US administration.
No, that is a different point. I'm talking about India's policies, India's economic policy changes recently, the reforms that have been announced related to MSME and so on. So have they been in the right direction? Have they been helping in the path of resilience or no? And the
Okay, you mean the budget? You talk about the budget and the government.
Budget, and also last year, some of the reforms that happened in the last year.
Okay,
COVID.
okay. Okay.
And
So you are talking about the government, government of India policies for the small and medium enterprises.
Yeah.
Right?
And I think the reason I'm asking this is particularly because there has been a dominant view both in the academia and in the industry circles that MSME sector has been badly affected in the last few years because of some of the policy changes that have probably not been implemented well in the ground level. Like GST has been one instance, but demonetization is another, and so on. But your thoughts on this, Subodh Bajaj, on how MSME stands with the government policies, and yeah, please go.
Yeah. So what I think is, in a country like India with such a strong culture of entrepreneurship, actually SMEs are quite thriving. Whatever we say, if they would not be thriving, we would not have such a large number of MSMEs surviving the onslaught of large companies and the cheap cost of capital and the volumes of scale. But you see, MSMEs are thriving. If you look at two states, I would like to point out where MSMEs form the largest component of the employment. One is Tamil Nadu and second is West Bengal. If you look at these two states, I think MSMEs form the largest number of employment, the largest number of enterprise. So it would not have been possible if they would not have been competitive. This is one. Secondly, the recent government policies, there has been biggest problem of MSME is lack of finance. And when they supply to any large companies, public sector units or big companies, they are taken for granted. Their payments are not released on a priority basis. So recently the government has come out with a norm where no large company can hold back the payment of MSMEs, which has actually helped large number of MSME companies. We and including everybody, that is one very good thing which the government has done. Secondly, the cost of finance, there is some effort, some movement in the direction of giving us concessional finance to MSMEs. Already there is a 2% subvention available for MSMEs. So I think these are steps in the right direction, but again, the policy continuity is a big problem. Yes, some MSME segments are affected, but as I told you, MSMEs comprise 70% of India's export and 80% of India's employment. So I believe they have some inherent strengths. They know the market niches, they know the market requirements, they fulfill special needs, they are sitting in the nooks and corners. So I think we have some special strengths and we will survive.
Wonderful. Thank you, Mr. Bajaj. Dr. Mathur, would you like to add to this?
Well, I think he knows the situation on the ground far better than me, so I defer.
Thank you, Dr. Mathur and Mr. Bajaj. Another question I think you already kind of alluded to, Mr. Bajaj, is about the change in U.S. administration and other and the related changes that can happen in the global trade scenarios. Do you think this is going to have an impact on the exporting businesses in general, and particularly in your case, do you visualize any major opportunities or challenges emerging from this?
Yeah, but I would say this, that the Trump era has created some permanent changes in the way the global trade is conducted. That is for sure. Whichever is the dispensation comes, some permanent changes have been induced. No more the world and the people of this world look at a trade merely a trade. Now they've started looking every trade from the angle of geopolitics. Even the man on the road in India is aware what good is coming from China and what good is coming from other parts of the world, what good is made here. Even everybody in US is aware of who is expert, which country is selling which goods to their country. So I can say that before the money had no color, but now after 4 or 5 years of this last US regime, money has many different colors. And this is here to stay. It is not going any sooner. We recognize the color of the capital now. It was not there before. And I don't know whether this is a good thing or a bad thing, but
yeah, thank you, Mr. Bajaj. I think last year, yeah, please go ahead.
Yeah. Can you hear me?
Yeah, now we can hear you. Yeah.
Yeah. The second point is that what I foresee, I think a lot of regional cooperation is coming into the play. Now, because of this color of the capital, for example, many Chinese companies are investing huge amount of money in many other countries. So this is going to increasingly happen. Regional cooperation between the Southeast Asian countries, between the West African countries, ECOWAS, between the NAFTA, that will be a very important block, because there will be barriers to intra-regional trade, less trade across the oceans, more trade within the regions. They will be cooperating. They will be trying to compensate for this long distance trade. And one of the things which has happened, because partly because of COVID and partly because of this policy of geopolitics, is the shipping costs have gone up. In the last 1 year or 2 years, shipping cost across the globe has gone up by sometime from 2%, 2 times to 3 times. Not only the cost has gone up, but the availability of the shipping connections has reduced like anything. Partly it is because of COVID, and partly it's because of these reasons. And this is not a good sign. We have been waiting for it to normalize, the availability of ships and containers and rates and connectivity to normalize, but it has not been normalizing. One of the reasons is that the trades are now skewed in different ways. Earlier there was a balance of import and export from a country, but now because of the geopolitics, the country has many things to import but nothing to export. So the containers are going in, but they cannot move out. They have nothing to move out. Similarly, some countries have only to import but nothing to export. So this is not a good sign for free trade. We have to wait for the dust to settle. This is all I have to say on this.
Thank you, Mr. Bajaj. Dr. Mathur, would you like to add on?
I did not know that the rates have gone up, though I did see an article saying that there's a container shortage in international trade. I don't know the reasons for it. but I haven't looked at it at all, so I cannot comment on that. As for trade, yes, trade is now, uh, you know, less important. People want to produce in their own country. Not people, but the politicians. That's
Yes.
people actually, they want cheap goods. They don't really care where it comes from. But the politicians and some, the well-off companies want protection. So they actually uh, just use patriotism and excuse to make profits. And, for example, in the US, the poor people are all living on Chinese goods, Mr. Badri will know, but Mr. Bajaj, there's a store called Dollar General. And if you find a store called Dollar General, it's a poor area because they are only selling their products in poor areas, and everything costs $1 or $2 or something like that. And 99.9% of those things are made in China. Same thing with Walmart. Walmart is essentially selling cheap Chinese stuff to poor and low income people. You won't find Walmart in a well-off area. There's no Walmart near my home for 30 miles, okay, because we live in a well-off area and people don't go to Walmart because Walmart. So the poor people live on Chinese goods, and the well-off people say, oh, no, 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 we should all sacrifice and we should be self-sufficient and self-reliant, and let the poor also sacrifice. But anyway, they buy European goods, they don't buy the Chinese goods. So it doesn't matter to them what happens. So I'm on a rant here. It's not a simple economic statement. It's a rant that much of this notion that we will produce it ourselves is simply partly coming from industry, which wants to make profits by selling
Yes, exactly.
high priced, mediocre, I won't say lousy quality, high priced, mediocre quality goods to the emerging Indian market, while let the foreigners make the money. We'll make the money, and we will have our own pizza, we will have our own everything. So this is just minting money. The poor people, they actually need the cheap Chinese imported stuff because that's all they can afford. It's not a matter of pride or anything, as Mr. Bajaj pointed out, but the politics has swung in favor of patriotism. Trump made it America first, and it's not. I mean, I won't comment on U.S. politics, but certainly the fear of China is such that nobody wants to be beholden to China, and you don't want to become, uh, linked so much to the Chinese economy. In fact, I use a term on LinkedIn all the time, which I call Chixit. It's after Brexit. It's Chixit. We exit from China. Everybody wants to. It's not about trade. It's about exiting from China. You don't want to become so dependent in the arms of the Chinese economy because of political considerations. And certainly in India, those considerations are very important. There's no way around it. They are important. And I see this all the time from people on Quora that, sir, why can't we just stop importing from China? I said, yes, you can, because you can afford it. But there are people who can't afford it. And they say, well, they should sacrifice too. I say, yeah, you go and tell them that they should stop eating 2 rotis. They should eat only half a roti. Then you'll be happy, right? But anyway, I'm on a rant here. Let me stop.
Oh, thank you, Mr. Bajaj and Dr. Mathur. I think you really nailed the points that, and I completely agree with you.
One point which I just want to make is that I personally believe that this era of trade anemia, like kind of breakage of trade links and stuff like that, it cannot happen for a long period of time. The world and the business people, they are too smart and they need the trading links to survive. And the economics, the market functions on its own. The market will survive. Whether we survive or not is a different question. So for the market to survive, it has to be efficiency of the trade, which can only thrive with free trade. So the world has moved in a different era, and it's an animal which is unleashed. So I don't think that the efforts of any government to stop it, trying to stop the forces of market by trying to impose nationalism or the color of the capital is going to happen for a long period of time. We are seeing it now, but for how many years? I think we cannot see for a long period of time. If we see, then you will have riots on the streets, you will have less economic growth, you will have so many different repercussions. So I am an optimist for free trade going forward.
Wonderful, Mr. Bajaj. I think that's a great point of view, and I think one way I see this happening is by Chinese, for example, Chinese companies. They are moving to other countries, but they're still Chinese companies, right? And there are transshipments where goods go away from out of China and then come out of other countries. So all these things are happening. Like a couple of years ago, I visited Mongolia, and there they were saying that they have this cross-border economic zones between China and Mongolia, and they have become very busy these days. I mean, those days when US-China trade tensions started, and they were actually quite upbeat. Like Mongolians are very happy because a lot of things made in China, things are exported from Mongolia, and they become kind of made in Mongolia. So, and then Mongolia has its own market access benefits, being a landlord country and former LDC and so on. So they have their own access to market, which is an added advantage to the Chinese exports. So that's one example. There have been strategies like that already working, and I'm with you on the point that this kind of protectionism cannot sustain for a long time. So the last question I have is kind of probably ending on a kind of a practical and kind of optimistic note. That is, in general, I mean, the startups and the companies that start from scratch and become a big success, that is, those kind of stories are not unheard of in India. So in general, you can say that startups are sort of success stories in India. And US, of course, has many such stories, but it's not the case in some other parts of the world. So what I would like to ask is, since your own company has developed so well, and you've developed it from being a startup to a medium-sized company, do you like to share any of your thoughts on entrepreneurship for the youth who want to become entrepreneurs? So to think positively.
Yeah, so for the youths who want to become an entrepreneur.
Yeah, please go ahead.
Just hold on for a moment. I would just like to share something. Hello? Hello?
Yeah,
Hello?
now we can see your screen. Yeah.
Yeah.
Can you see my screen?
Yes, yeah. I can.
Yeah.
For the entrepreneurs, for the young people who want to start up, this is my message and this is what I believe.
Yeah, okay. You are the expert, not me.
I mean, too many people, they have got beautiful stories, they have a vision, but they don't have a guide path of data and continuous feedback where they are going, uh, what is the profitability outlook, how they will reach their goals. So they fall by the wayside. On the other hand, there are also some entrepreneurs who are too focused on the profitability, who looks at the data all the time, but they have no story, they have no vision. So my message is, have your vision, believe in your story, but be very careful in making the roadmap, looking at the data continuously, because it's all about money. That's all I have to say.
Well, thank you. That's a very wise saying. I had no such information or knowledge, but you can be sure that I will plagiarize this.
Thank you.
Since you have not put a copyright on it, I will plagiarize it.
I have already plagiarized many of what you have said in the past.
Okay, good.
I think this is the mutual plagiarism is called open source, I think.
Yes.
Okay, great. Great. All right.
Thank you so
Well,
much.
it's getting late for Mr. Bajaj. I think we should end it now.
Yeah. This was the last question, and I think
wavelength on this.
Okay.
yeah, we can end on this positive note. So thank you.
Okay. Thank you so much.
Thank you, Prof. Mathur.
Most
Thank you
welcome.
very much. Wonderful.
Yeah.
So this is being recorded. The team will share the edited portions of this. Please share it across platforms.
Okay.
Across all platforms. This is going to be very important for us.
Okay.
Sure, Mr. Bajaj. Thank
Yes,
you.
thank you.
Thank you.
Thank you.
Bye-bye.
Thank you.
Bye.
Thank you.
Thank you,
Thank you.
Mr.
Bye.
Dr. Mathur.
Thank you.
Yeah, have a
Bye.
good day.
Bye. Bye.